Check the link out. Join us live in Zoom. We are focusing on doing 2, 3, 4, 5 trades in the morning session and bank our money for the day based on a price action trading methodology. Sal Shawul is your host. Everything we do here is for educational purposes only. Nothing is to be taken as direct trading advice. You're trading between you and your broker. It's very important to note that. This is not for investment advice. This is not for trading advice. This is to teach you to develop consistent profitability, help you trade better, focused, more focused. And in the reality of things, it's like the internet of things. Trading is and somebody had mentioned it the other day. It was a pretty good quote. Not sure I'm getting the quote right, if I can speak. Um, the trading is very simple, is extremely simple. The act of trading. And he had a phrase, and if he comes back in, I'll ask him the phrase. But it's very hard to make money and hold on to it. And that's what we look to do for you here today and on a daily basis. Is how do you narrow your focus to doing one thing and doing it well? How do you narrow your focus so that you are able to come to your screens, set key levels, and then act on those levels based on the entries, exits, and stops in and around those levels? Where do you enter a trade? Why? Why do you not enter a trade? Why is a level valid or not valid? There's a lot that goes on in and around, what we do. So when we say it's simple, what we're saying is that chart creation, crosses, time frames, MACDs, indicators, they're all very easy to develop a talent to use them and execute trades. But the concept of being where you should be at the right time, where you should be entering trades at the right time, what prices to enter trades, where to put your stop in, all around what I call where the rubber meets the road at the price action level of the trade, and how you can derive money out of it. And that, I think, is the difficult part. Being able to do two trades with a couple contracts, bank your money, and then go off and leave your screen and do something else, whatever that else is. And I think that that's really important to be able to develop that skill. Now, coming in here and having somebody trading the same system, if you can call price action a system, I don't call it a system. Price action's been around for a long time. And having been around for a long time, we sort of lost track of it. And a lot of traders that are in the know have had price action on their menu, and traders that have tried to do this on their own and utilize standardized software and standardized charts and standardize everything, even paying up for it for extra bells and whistles, hasn't really helped that much. And that's interesting because the failure rate in trading, and I blame a lot of things, and certainly one of the things I blame is standardized software. That's why I think for individuals, this is different. Sal's looking for a minimum trading profit on each trade of 2 points. That's a minimum trading profit on each trade of 2 points plus, 2 points plus. He's got a minimum, he's looking for a minimum stop at 2 points. Which is very interesting. And I would venture to guess that his trade entry, is different than you would make at a particular area or level. And hopefully you're here to learn that. So that's what we do on a daily basis. That's the opportunity that presents itself to you. To be able to come to your screens, be able to set yourself up for the trading day, and be able to do those 2, 3, 4, 5 trades and be satisfied with the money you made. And come back tomorrow and do it again. And that's really the nuts and bolts of trading success. But let's talk about Sal's levels. Sal's going to give his levels out in a couple of minutes here. He's going to give them out in audio. Write them down. Okay, write them down. Put the pivot in the middle. Write the other levels on top and bottom of that pivot. There could be 4 or 5 on the top and the bottom. These are the areas that Sal is interested in today. So he comes to his screens this morning and he sets his levels, key prices for today's trade for his own trading. And he lays those levels out right around the cash open. So it's 9:24 now. In a couple minutes, he's going to lay those levels out for his own trading. And he's going to give them out to you as representative areas that he's looking at so that he can have a trading advantage over other traders. So he can be disciplined and prepared for price movement, price action trading in and around those levels. And that's really an important thing because the first level of opportunity here for you is one, to have Sal's levels and be able to understand based on price movement and action around those levels that they're better levels than you get from your software or by calculation. I mean, that's really important to understand. How do I have a trading advantage over other traders? How do I focus on levels that I can start to understand based on price change in around those levels and my ability to put a trade on? And again, it's the entries, exits, and stops. It's the prices. How do you defend yourself so you don't get shaken out as often? Shaken out means stopped out. What do I do next? Where do I enter a trade? Why do I enter the trade there? What's my exit strategy on that trade? And that's why I call it like the Mr. Miyagi, because you have the wax on, wax off. You're just doing that over and over again at Sal's levels on a daily basis to understand how to do it for yourself. So that if you have now better levels, you have Sal's commentary, and you have the trade action in and around those levels, and you can focus on that, then you're way ahead of the game. So that's the opportunity that presents itself. That's why we send you out the opportunity to sign up for Sal's monthly on a discounted basis. Sal's going to step in. When he steps in, he's going to take over. I'll send out the opportunity to sign up for Sal's monthly. If you're coming through on the outside, come on the inside. Look for the Zoom link. I'll send it out to you.
All right. Good morning, everyone. Can everybody hear me all right? All right. Fantastic. All right. Let's give you our levels for this morning. Welcome to some of the new folks that are here. Again, we'll have time for questions, but just right now we'll start with our levels and explain what's going on. Hopefully, we can explain what's going on. And again, we are always at the mercy of volatility. Keep that in mind as we're trading, because yesterday was a slow. Last couple of days would have been slow, but gave us few opportunities if you're very patient and waited for the opportunities to kind of crystallize and create themselves. Um, our pivot this morning is 38.24. 38.24, resistance above at 30, 38, 44, 50, 59, support below at 18, 10, 04, 37.96, and 37.86. Pivot 24, support 18, 10, 04, 37.96, 86, resistance on the upside at 30, 38, 44, 50, and 59. We are trading mini S&Ps here. We're trying to take advantage of ebbs and flows of the market. We don't believe the markets go straight up or straight down. Consequently, we're looking for those inflection points that give us the opportunity to scalp the market. We hope to get 4 trades on average in a day, but the last couple of days, obviously, those numbers are not as achievable. Maybe, I don't know. It all depends. I mean, that's not necessarily true. If you are very aggressive and if you are looking for opportunities to trade, there are. Except sometimes I just don't like to trade them when the markets are very slow. It requires a different kind of mentality to trade, but if you can handle that and understand that that's what it takes, then you could pick your spots here and there. Somebody asked about records as far as what my record is. The opportunity here is based on your individual risk tolerances. Some of the trades that I make maybe won't be trades that you make. We teach concepts and ideas. We teach reasons why you would enter trades, and then it's up to the individual trader to decide for themselves whether they want to take that trade. I try to explain the risk involved, and then it's up to that individual trader to make that decision whether they want to take that trade or not. Levels, obviously, the support and resistance levels are out there, but those are self-explanatory. But the price action opportunities that occur are taught, and we try to, you have to try to decide whether you recognize that trade, you understand the setup, you understand why it's being given is an opportunity, and individually have to decide that that's the trade that you want to take. And that's where the difference comes in as far as what's your record, because I've been around I've been trading around a lot of people, and I know that some trades somebody else will take, some trades won't. The setup is still there, but it doesn't mean that everybody has to take the trade. So we're here to kind of guide you, help you, hold your hand, try to explain some of the market movement, try to tell you when not to trade. It's also important. Yesterday, there were a couple situations where we said, all right, we had a level there, but because of the price action prior to that, we decided, well, I don't think we should, or I suggested that you shouldn't take because it's a little bit more risky. And that doesn't mean that not everybody took the trade. It just means that it's a little bit more risky for various reasons. So we try to explain those reasons to you, and we let you make those decisions on your own. As the market slips up here, we got a resistance at 30. I'm watching. Don't worry. I got my orders in the queue. I like that word, queue. Anyway, so it's up to you to decide whether you want to partake in the opportunity or not, and which is, everybody's got different risk tolerances, like I said, and I understand that. So, well, good. You don't have to take every trade that's out there, especially, well, that's another story. All right. So again, if you have anybody new here has any questions, if you look at the chat box area, The levels are typed in there for you. If you want to ask a question, please go through the chat box area. I welcome questions. It's only you only get to know what I'm doing here, and if you want to participate in our education course, because we put together this methodology and teach it, and if you want, this is the way that you can ask questions to find out more information and then see what you want to do. Can we put the levels up again? If somebody can. If you look at there they are. There are the levels for us in the chat box area. Thanks there, Mark. So that's where we're at. And we snuck up there, almost got us into our trade there. 8.5, come off a little bit, still on the same bar. Let's see. We don't document the trades that I take or that we suggest, because, like I said, it's not a good indicator of what we do. It's not what we're trying to do here. We're trying to make money on an everyday basis, and that's our goal. And for me, see, I never understood that. I guess because I was a trader in the pit, I never understood. Like I would trade in a course of a day 1,700 contracts or something, and I never could understand how somebody would ask me about my record, because how can I quantify that? I know it's different on the screen. I get that. But I never kept my records of my trades. And that's why I don't understand. I know people want that, but this trading. It's not clear cut. I'm not dodging the question whatsoever. I'm just being honest with you. I just don't understand. People ask me that, and I know you want something definitive, but it's not feasible. I mean, not in my mind. I never kept a record of the number of trades I put on and the number of trades that work and the number of trades that don't. I just want to be profitable at the end of the day. It might take 5 trades, it might take 2 trades, it might take 20 trades. To me, it doesn't. That's not the point. The point is to make money. But again, I understand. I appreciate the question. I'm just explaining to you from my end of it. What it's a very tough question for me to answer, because I just don't keep a record or document anything. Signed, sealed, and delivered. So you got to be a little bit careful here around the 30 area. Maybe take the upper end just as this is an idea here, because of the way it came up here, traded up here. Again, we scale into a position, so there's different ways of getting in into a level, and it all depends on if you trade multiple contracts or not, right? If you trade multiple contracts, you have the ability to scale. If you only trade one contract, I totally get it. And you have the ability to get in at one price, so you have to decide what price it is, and so because of the price action here, maybe inch it up just a little bit to 30.5, 31 area instead, just because of the way it's reacting up here. Yeah, so that's kind of what we do here. Again, I appreciate the question. And I'm just giving you an honest answer. That's all I can say. I'll give you my answer anyway. That's all right. Enough of that. Let me see if there's any numbers coming out this morning. Existing home sales is coming out here at 9 o'clock. So if we're trading around 9 o'clock, we don't like to trade when there's a number that's going to be released that might affect the market or our market a little. So. And existing home sales is going to be released at the top of the hour. At the top of the hour here. So keep that in mind. If we get up there and we have something around that area, or if we have a trade possibility, and I don't like to trade when I don't like to have a position when numbers are out. Seems that every time I seem to have a position when a number is out, seems to not not happen for me. So, and I've told stories this week about numbers and positions and how it doesn't feel well when you're watching the thing go against you when you have no exit strategy because there's no market to give you an exit strategy. So that was not good. Anyway, that's another story for another day. Again, if you scaled in a point above and below, you got the 29s there. And if you didn't, if you're looking for an upper level, that's fine. You can wait for it a little. Since we're on the same bar, it's still okay. But if you did scale in a point above and below, you got the 29s and you had a quick rotation off of that level down to 26 and change. Again, we are trying to take advantage of ebbs and flows, different ways of entering trades, scaling in. I mentioned that some of our traders scale in a point above and below. Some of our traders scale in a half a point above and below. Some of them have them all. It all depends on how many contracts you're trading. Again, that's why it's this is an individualized situation here where we focus on your risk tolerance and work around your risk tolerance and how you can take advantage of your risk tolerance and maximize profits according to how much risk you are willing to take, which is always the trick, right? It's always the name of the game. Somebody came into the room this week and they was asking me, a new person, I don't think he's been back, was asking me a straight up question. He was totally serious because can I make $20,000 a day? I said, sure, you can make $20,000 a day. You can make $100,000 a day. I mean, you can trade whatever you trade and do whatever you have to do. As long as you have the account balance and it can understand the risk and trade it accordingly. I mean, I don't understand. I mean, what kind of question is that? I mean, how do I answer that kind of question? Can I make $20,000 a day? That was the question that he asked me. He first put it on a week. I'm like, okay, well, that's kind of doable. And then he goes, a day. Well, I go, okay, well, that's a little harder, but okay, might be doable. Again, you know, I was standing around traders on the floor who the minimum they had to do a day was 100 grand, and that was his like break even point because of all the trades that he made. Now I can never do that, right? I couldn't do what he did. And he was a great trader too. Nice, and and he was a good friend of mine. And we would talk about trading, but yeah. So everybody's a little bit different, and I can never do what he did. So I appreciate that, and that's why when somebody asks me about, can you do this or can you do that? I go, yeah, sure. Anybody could do whatever they want. It's just a matter of you're going to be able to do it. What is on the chart? Is the bar on the right? Bar at the bottom right. Oh, and the pink shade. Okay, so the bars on the bottom right there. This is a 5-minute chart. So those are 5-minute increments. So when that fills up, then the new bar starts. So the middle chart, I mean, is an hourly chart. So when that whole bar fills up, it's the end of an hour. That's when the chart starts a new band. So charts from right to left is a 5-minute ES chart. In the middle is an hourly ES chart, and on the left is a bond chart, 5-minute bond chart. Sometimes we look at the bond market to maybe give us some direction in the S&Ps. It used to work a little bit better than it used to be now, and since I traded in the bond pit, I have a little affection for having the bond numbers up there, just because I feel the bonds are king and they do at the end of the day direct everything. But that's a biased opinion. And like I said, I traded in the bond pit for a while, and so I have that chart up there. And there's a correlation once in a while. You do get it, and so if it helps us, that's fine. So those are the charts right to left. Again, the bars on the bottom, the pink ones there, are just the end of the 5-minute segments there, and the middle one is like an hourly segment. It's interesting. I don't know. It's the the manufacturer of this software. That's what they put on there. So, all right. So we got up to 29 there, and then we drifted off here a little bit. The 30 area, which again is what I had. And again, if you scaled in the point above and below, you got filled. Now we're getting up here to the 30 area. It's a little bit more risky. Like I said, maybe take, maybe up to 31-ish, 30, 31-ish, above 30 a little bit just because. It's a shame that I didn't put in 29, obviously. Not going to be perfect. That's why we scale. But because we were so close and we missed it, the price action is telling us that this 30 now is a little bit more, I don't want to say dangerous, but risky than it was 10 minutes ago when I had the level in there, because we got so close to getting our, some of you got filled, some of you didn't. But because of that reason, this level now becomes a little bit more riskier. So some of you will adjust, some of you will cancel, some of you will leave the trades in. This is all up to you. I explained the risk, and you as a trader have to say, okay, this is how I trade. This is a little bit more risky for me. I'm going to wait till the next level on the upside is 38. Some others will adjust a little bit. And this is a situation where I was explaining before, where you have to look at the price action. The price action will help you decide what you want to do with this level. So there's, the adage that I have is that I can explain a setup to 30 people, right? 10 people will make money on the trade, 10 people will lose money on the trade, and 10 people will scratch the trade. And they will all hear the same thing I say, right? Happens. They'll all hear the same thing I say. It's just a matter of how you get in, trade it, get out, da 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 da. So that's just the nature of the beast, unfortunately, and that's why we work with everybody to try to focus in on the differences and how you're going to handle it. All right, so we are a little bit choppy here, a little bit nervous this market, and rallying a little bit. They had numbers that came out from Intel and IBM that kind of spooked the market here a little bit. Good morning there, Andrew. How are you? How's everything on the other side of the pond there? All right, Timmy, you got it. Timmy, good. Way to stick with it there, Tim. Way to hang in there. Nice trade there, Tim. Tim had the 9.5, and it drifted all the way back down really quick. He likes that trade. That was not only was a no-brain trade, it also didn't make you wait too long. Would you have to wait like 30 seconds? Sorry, it took so long. Good morning there, Peter. How are you? Can somebody repeat the levels in the chat box area for us? There they are. Those are the levels that we are using, participating in. As we quickly come back up here again, we said the 30 is a little bit more risky. So if you adjust it a little bit, maybe you're adjusting up here. Yeah, I know. The first time, I know we missed it by just one. Uh-oh. That's not good there, Don. Don's having a little problem with his computer this morning. No, that's not good. Hang in there, Don. It'll treat you nicer one soon. Don't worry. Uh-oh, that's an understatement. That's not good. That's not good. All right, we are obviously coming up here to the 32 area. Again, we just told you how much riskier that 30 level is. And if you adjust it a little bit, maybe you did, maybe you didn't. But if you canceled, that's fine. If you left it in, you're probably getting stopped out right now. So Don, take it easy, man. Take it easy. You can always go buy a new one. All right, so we've come up here, drifted a little bit higher. Again, we discussed how a little riskier it was, and how it became a lot, and why it became a lot risky, and why some of you kept it in, and why some of you would have canceled it. So it's some of you made money on the trade, maybe some of you lost money on the trade. But this is where we're at, right? So Diamond, I'm trying to explain to you why it's hard for me to give you a record, because everybody's going to be trading it differently. I'm sorry. All right, let's see. Google here is pulling the pin on Project Luna, a decade-long old venture that's planned to beam internet to the Earth via giant balloons. It's interesting. While it's a struggle to get off the ground, the experimental business saw some successes over the years, like helping restore cell service in Puerto Rico following the Hurricane Maria and getting tens of thousands of Peruvians back online after a heavy flood in 2017. Loon even launched a pilot service in Kenya last summer, sending 4G LTE signals down to an area of 30,000 square miles. I never heard of this Loon thing. It's interesting. Putting big balloons up there with cell towers on they're bailing on it. I guess the winds are too much. I don't know. All right, market again coming up here, trying to. Somebody asked me, could you have bought it? If you were very aggressive, you could have had a reason to buy the opening. There was a logical reason to buy the opening. So when I say logical reason, we layer in a whole bunch of reasons in our trades there, so that you have reasons to trade. We show you what those reasons are. We explain to you what we're looking for, and then you have to make those decisions whether you want to take the trade or not. Again, if you were very aggressive and you wanted to partake and you wanted to get long, if you thought the market, you could have had a reason to get long, and there was an exit strategy underneath it. So if somebody, I guess there was, you had to really buy the opening right at. I'm saying that now, but my point is that there was a reason for it before. If you looked at the chart before, you could have said that was the reason. But we don't like to trade right off. Some of our traders don't like to trade right away. They kind of like to give it a few bars for the market to kind of absorb this initial burst of activity, a little burst of volatility, a little burst of volume. So you get this first, volume pickup in the morning at 8:30 it used to be when the S&P pit opened up, and so that now as the S&P pit opens up, you get some push, more volatility comes in. That's why when we wait till about 8:30 here before we start, only because that's when the market kind of opens up. You get this flood of orders coming in, a flood of activity coming in. More traders are ready to go right at 8:30, and the volatility picks up like a whole bunch. And that's mainly because the big S&P contract, which only traded in the pit on the floor, opened up at 8:30. Consequently, since COVID and the floor not being available, uh, the market still looks at that 8:30 number and says, okay, let's wait till 8:30 before we can start trading. And that's what it's been doing lately. So they do the same thing with the bond market. The bond market opens up at 7:20 on the floor in the pit. And usually you get a flood of activity around the 7:20 number area, than more than you would overnight. So it's good to see that old habits still are in there, considering the floor is not there, which is very, very sad. If in my view, only because that's where I learned how to trade, and it was fun yelling at people, and I didn't have to keep talking like I do now. It's not my favorite thing to do, but the main reason I opened this room was because when I had to get off the floor, I had to go upstairs to my office and trade, and it was so boring up there where nothing's going on. It's very, very quiet, and you're just got you're watching numbers on the screen change. Before you used to, I had people around me, talk about the market, talk about something. I mean, I had my TV on, listening to CNBC, and I tell you, after a while, those guys on CNBC, I mean, they just are not fun to listen to anymore. Oh, Don, thanks a lot. You appreciate it because you fill in for me every now and then, and so you understand. You understand. Investors were not impressed with the latest quarterly results from IBM and Intel, respectively. After the bell on Thursday, Intel initially gained on a premature release of its earnings, but slumped after the company's CEO committed to an in-house manufacturing. IBM, meanwhile, signaled that the cloud bet will take longer to pay off and post its fourth straight quarter of revenue declines. So that's one of the main reasons we have opened up lower, traded lower overnight. As after the close yesterday, they came out with their earnings. So we do have a number coming out here at 4 minutes on top of the hour. Don said that he doesn't think that people want to hear about getting his tractor stuck in the mud. I'd be fine with it. Listen to us city folk, tractor stuck is a good story for me to listen to. As long as I don't have to tell the story, I have no problem listening to that. All right, so we came up there. We talked about the little adjustment to the 30 area. I don't know if you took it or not, or if you canceled it or not, or if you just left it and are trading out of it. So hopefully, we definitely adjusted because it kind of disqualified itself when it got up to 29 there and stopped, 28 and stopped, whatever it was, and so we said, it's a lot more riskier than it was like 5 minutes ago, unfortunately. And so we'll look for either adjust higher or we'll look for the 38 level. Now, when I say adjust higher, there's a reason I'm saying that, because when I give out a level, it's just not only that level, there's a backup to it just a little bit. So, if we have a support level and we say make the lower end, is because I think there's a secondary support level right underneath it or above it, or resistance above it. So That's why I say we can adjust. I'm not just telling you to do that because it sounds good. It's not it's not exactly what I'm trying to tell you to do. So, okay, next level on the resistance area we have is the 38. The only problem is at this moment is well, there's a number coming out here in about 2 minutes, so keep that in mind. Uh, we don't like to trade when numbers are released. It's not healthy. I like to keep my sanity. That's why I don't trade overnight and I don't take positions overnight. Keep my sanity. At some point, you got to shut the machines down. A couple times I had positions overnight or took them accidentally. That does happen once in a while when um, you yeah, well, back when I was trading on the floor, sometimes we had a miscount, and I just never did well with knowing that I had a position on, no matter how big or small it was. It just, bothered me. So I just tried to just stay away from it, is what I'm trying to say. It's a good thing for you. You need to sleep. I always had my computer on. Well, I would be calling up, finding out what's going on. It wasn't wasn't susceptible to good sleeping. So, and one of my mentors when I was trading always told me, he goes, if you want to, there's really no reason to have a position on unless you're going to do the O'Hare trade. Anybody know what the O'Hare trade is? Can somebody repeat the levels again? Put them in the chat. So anybody have any idea what the O'Hare trade is? All right, so the number is out here at 9 o'clock. Let's talk about that first before we talk about the O'Hare trade. It's kind of just hanging here, so the number really didn't affect us that much. That's a little bit maybe continuation rally here, but we don't have anything on. Maybe we have the 38 area as it slowly continues to uptick here. We have that level next. So our pivot this morning is 38.24. We had resistance at 30, then 38, 44, 50, 59. Support below at 18, 10, 04, 37, 96, 86. All right, the number here is pushing us up here. Again, we got resistance up here around the 38 area. Seems like it's that kind of day today. I'm gonna miss our levels by just that much. Kind of a little frustrating. What can I say? Sometimes we're good, sometimes we're just that much off. They updated your Zoom and it's doing strange things. I think you should just talk to Brad. He can handle all these problems for you. Putting him on the spot. I don't know. I don't know. Don't talk to me about computers. All right, we're slowly drifting up here. We've got resistance around the 38 area. And we're just having one of those days where we're coming close, getting the rotation, but we're not getting filled. So that's a little annoying. But hey, that's what happens sometimes. That's what happens. Oh my goodness. This is bad for you. And it's 9 o'clock and you haven't made one trade yet. That is news there, Don. That is, you're usually out of here at 8:35. That is big time news. You are really having trouble with your computer. Well, since it's Friday, Don, let's not get upset. Just don't get yourself just call it and let's wait till Monday, get your computer fixed, and that way you don't have to have a bad weekend. And if you start trading for no reason, get all upset and try to catch up or do whatever you're going on in your head. So just get your computer fixed and just kind of just, there's always Monday, right? Let's just, I know you just want to throw it out. I get it. I get it. So, all right. Like I said, we just seem to be missing our levels by just that much this morning. So it's kind of a little frustrating. So we've come up here 38, got up to 36 and change, came off. Kind of have the same situation like we did below. It happens. What can I tell you? At least we know they're there, they're working. You're just missing them by just that much. So I guess it's not the worst thing, but it's also making you either cancel or lessen your risk if you're trading multiple contracts. Just lower the amount of risk, maybe adjust a little bit. Different ways of dealing with just being missing our levels of today. It's a little frustrating. I get it, but it's the nature of the beast. That's what we got. That's what we're traders here. Nothing is perfect. It just doesn't tell us what's supposed to happen. Let's see. Bitcoin is set to notch its sharpest weekly drop since September after slipping as much as 9% to under 30,000 in Asia, the Asia session. And only 2 weeks ago, the cryptocurrency hit $42 and is down 30% from record highs. Be on the lookout for more outsized moves, as the crypto trade never sleeps, not even nights or weekends. Ugh, can you imagine? Oh God, it'd be brutal. What happened? Frothy rallies have always reasons for a pullback, especially for an asset that's 700% above its 2020 lows, as well as the increasing costs for regulation. At the U.S. Senate hearings this week, Janet Yellen expressed concerns that crypto could be used to finance illegal activities, while the ECB President Legrand called for global regularization of Bitcoin. And there's also a report, the so-called Bitcoin double spend, where the same token is used as the same person in two transactions that would turn out to be a bogus report. Huh. Um, in a fresh research report, analysts from JP Morgan said that Bitcoin is not a hedge against market crashes. In fact, if some traders use Bitcoins to make even more money, it would mean that it's even more correlated with the rest of the market. Yeah, I don't know. I never understood that. But I mean, I just never got into that Bitcoin thing. Unfortunately, I don't know. So I will tell you my story of my friend whose son was a computer genius. Well, you know these computer guys. They do amazing things, right? You get the right person in front of a computer. He sits there and whizzes. He came and set up my computer on the floor, and he's doing stuff to it like I would never know what to do, right? He's like doing this, that. He's writing code. I mean, who the hell knew he could do that? I mean, he knows what he's doing, right? So, but and the kid, and now he's not a kid anymore, but he was way too smart for his age in school, and unfortunately, he had a few issues because he did. But my friend did everything he could to to get him on the right path, and he did. And he's got a great job now. He's fantastic. He's doing great. My point is, so he started, I guess you call it farming Bitcoin before farming Bitcoin became Bitcoin. And he would tell my friend that he got Bitcoin. My friend was, oh, good. He goes, oh, you know how much I got? Like, 100 Bitcoin or something. It's worth like $100. Oh, my friend goes, oh, that's great. That's fantastic. So, and then 5, 6, 7 years later, Bitcoin became Bitcoin, and everybody knows about it. It's trading, gazillion dollars now a Bitcoin or whatever it is, 20,000 at that time on the first rally up. And my friend's telling me the story that his son was into this stuff, and he farmed this stuff. I mean, this is how well, way advanced he was as far as he knew about Bitcoin before anybody else did, right? And he had like, I don't know, like 120 Bitcoins or something, right? Now you could figure it out. It's 30,000 a Bitcoin, but it was on his computer, and you need a code or something, right, to get to use the Bitcoin, and he couldn't get the code. He knew it was on his computer, but he couldn't find how he could. It's lost in computer world. It's lost in the in the frenzy of computer world, because he cannot get the codes off of his computer that he downloaded the Bitcoin on. He was actually doing this stuff, farming his Bitcoin on his computer at the time. And my friend, it became a big thing afterwards, but at the time, it wasn't a big deal for him to do it. And he did it, and he can't get these Bitcoins off his computer. Think about it. I mean, it's a lot of money. That's a hell of a lot of money there. That's unfortunate. Very unfortunate. And believe me, if anybody could get information out of a computer, he could, and he couldn't. So that's how amazing it is. That story is amazing, and it's all true too. It's absolutely all true. I could never make that story up because I don't even understand half of that stuff. All right, you can see here we did go up to 37. Like I said, we're missing it by that point. If you got in a point above and below, you got a nice trade going. Is unfortunately doing the same thing it did on the 30 area. We're missing it by just 1 point. I wish I could have told you that we'll adjust down by just 1 point so we can all make money this morning and be done with it. I wish I could have done that for you. At least you know the levels are, even though we're not getting in, the levels are good. If you're scaling in a point above and below, you are definitely doing okay. Oh, thanks, Mark. Thanks for coming back. I know you're working out of that trade because I know you got in a point below, above and below, so you're happy. The levels are in the chat box area. If anybody wants to know where our levels are that we gave out this morning, they're in the chat box area. Sorry, I'm chatting too much verbally. All right, so like I said, unfortunately, we are missing our entry points by just that much. If again, some of you got the 37s, that's good, even though we had 38. But if you scaled in that way, you're good. Support right now would be down at around the 27 area if you're looking for some support in the market. And again, any trade that we have or we put on, it's always backed up by a stop because that's what we do. We just never know when these trades are going to be nice or not. And the most important thing, as far as we're concerned, is to make sure you come back tomorrow. Right? That's the most important thing as far as us trading is concerned. Is always make sure you come back tomorrow, because we could have a day where we're hitting everything, or we can have a day where we're missing everything by just that much. But tomorrow will be a better day. And if you traded a little bit and we got stopped out today, it's okay. You can see here we're very close to being really good today. Unfortunately, we're really close to really not trading that much. All depends, though. Not everybody's doing that, and everybody's. I know a couple of you are happy because you got a point. You got the point thing, and that's all right. That's good. That's fantastic. Anybody have any questions? Please feel free to write them in the chat box area. I am starting to run out of breath here to talk, so I need something that you need to help me out here. As unfortunately, I'm missing my trades by just that much. So it's bumming me out just a little that I can't get. Well, I'm not losing money, so I'm up a little bit, but not as. It's kind of disappointing when you're so close and you can't get filled. And they turn out to be really good. Well, as far as I'm concerned, not everybody. Well, your my cooked up levels that I come up with are not uh, made up uh, before midnight. They're made up. They're a bunch of work that I do before the market opens up. So I can't say that my levels are cooked up, but if that's the way you um, categorize them, all right. Well, I mean, usually because when you go and up to, if we start extending here a little bit, it'll probably go through that level since we just missed it by a couple ticks here. So, considering we're scalping and we're looking for 2 to 3 point stops, the extension above the high probably will take us 2 or 3 points above that, right? Usually, depending, maybe, maybe not. So the fact that I had, 37 or 38 and it got up to 37 and change, it's almost as good as me getting, it's unfortunate, but to me, that's the level, and I missed it by a point. So now the next, it becomes a lot more risky. It's not the equivalent. The importance of that level has decreased multiple times because of the fact that I should have had 37 instead of 38. So consequently, if you don't adjust, or if we get back up there, and there's a good chance if it goes through, it's going to go through a little bit more than 2 points or 3 points. Usually the case. So that's why it's a little bit more risky. But like I said, though, there is a reason that that level is up there. So um, again, but I seem to be missing it by just a point today. Maybe that should tell you something for the next level. I know you got the 37 there, Mark. I know. That's why I called it out for you already. You do the you do the 1 point thing. I get it. I understand. I called it out. I called it out when it happened. I said you were in there for sure. And when I asked you to put the numbers up there, you didn't even bother to answer me because I knew you were in the middle of that trade. Again, anybody has any questions, please feel free to ask. I got support down around the 27 area. Yeah, I mean, we've got 27 as support there, Mark. I mean, obviously keep your stop in, so I'm not telling you to love it. Now we're coming down here to the 27 area here. Market got a little bit, got some selling pressure. Again, if you're going to take it, just keep your stop in. Drifted through, came all the way down here to our pivot. So a little bit of nervousness in this market. Something is triggering this little sell-off here. Could have gotten short anywhere. I don't know. I mean, the only place we could have gotten short is up above there against our our upper level there. Went down to our pivot and then rotated back up here. All right, nice trade there, Steve. Good job. All right, next support on the downside we have is all the way down at 18. That would be an interesting little sell-off here all of a sudden. But hey, seen crazier things. Somebody must have said something again. These things that we are not privy to information. Sometimes when the market has these moves, you could have then it's follow through with some stops, and so the combination of both. As we are working this little area here, if you did buy the pivot there along with the 27, I think you're doing okay now. To take a little bit of heat on that one. But hey, you know, this is what we're doing. We're trading here. Doesn't always work out perfect. But you had a reason to buy the 24s also. First rotation back to the to our pivot as well. Right. All right, so that was an interesting little opportunity there. Just had to took a work on that one just a little bit. At least we didn't have to wait that long for the rotation back up here to the upside. All right, so next support level on the downside we have is down at 18. And nice. At least we're getting some opportunities here. And that time we have to work on that one just a little bit. I must be, right? Well, you're happy. Would you buy the 24s also? I knew that. All right, I think you want to get in here now?
I am here. I was just waiting for you.
Well, I was just waiting while we just had a little hiccup here in the market, so it gave us a little quick opportunity to trade. So sorry I had to hold you off for a minute.
Hey, what do they say? Money never sleeps?
No, they say this is the hardest way to make easy money.
I tried to use that this morning.
Yeah, that's a good
think of that quote.
Yeah, I know that's a good quote. I've heard that one before. I think I've heard that one before. I might have even used it before, but It's a good quote for trading.
And it's and it's been well used
Documented.
over the years, right? Well documented.
It's been documented. People want
That's crazy.
documentation.
I
And
think it's interesting because people want something, whatever everybody comes to the market with sort of a different idea of whether it's a hobby, a business,
a coloring book.
whatever, right? And the price action trading has been around for a very long time. I call it the last bastion of hope for traders.
All right, since you're starting on this thing, I'm going to take a little break
Come
here.
on, you got to get in on the last bastion of hope, right?
I am the bastion. I don't know if it's last hope though, but I am definitely.
You know, and what they want to do is they want to squeeze you, right, to get the most out of you for nothing. No, I'm only kidding. Um, so I wanted to welcome the new people that are coming in and some of the people coming back. We have guests coming in. Thank you. We have current monthlies here. Thank you. We have individuals that have signed up for Sol's course and mentoring work. Thank you. The feedback that I get on the course and the mentoring work, I asked a couple individuals yesterday, and it was very nice response. Everybody's response was a little different, but they were certainly impressed with what goes on here and what the opportunities are. It was interesting before Saul was mentioning everybody is different based on their risk tolerances and what they're looking to do. One of the comments that I think is interesting is that, and just from Saul's perspective, he's been doing this for 25 years or so, but he was also trading on the trading floor in Chicago where there is no backup plan. You either got to be a moneymaker or you're out, from the trading perspective. And it took him, based on his, you know, I don't know, what do you call it? Describing his history, his time on the floor, which got interrupted because of the COVID. His time on the floor, he was trading up against the best traders in the world, and I think he said he had 3 months to prove himself to be able to stay there, be able to make enough money to, in other words, he was staking himself, and he had to produce, or he wasn't going to last. It's interesting when we're home or in an office on a computer, the internet. There are individuals that try this for years and learn an awful lot about everything around trading, charting, order entry, various, Japanese candles. We spend a lot of time and effort learning what would we call it? The trappings of trading, or I don't know if it's a study of all the different components to trading. When I call price action trading the last bastion of hope for traders, that is for traders that have tried this for a very long time and are now really looking to get it done. They don't quit. And then you have new traders that get set off on the right foot, and they're happy as clams because they're not they get the sense pretty quickly whether they can do this or not, because price action trading is where the rubber meets the road, and the entries, exits, and stops based on the movement of price in those areas. And in this case, you have the best part, which Saul is giving you levels out in audio and in his class, teaching you how to set those levels and working with you based on the entries, exits, and stops in and around those levels. And that's the part that you need to pick up and practice. That's why I was calling it wax on, wax off before, because everything else is just sort of, I don't know if it's playtime or a lot of ego driven, trying to learn a lot of stuff about the market and a lot of stuff about individual markets, how you have to interact with them, the tools used, the history and the various pieces of the puzzle when it comes to standardized trading software, which I despise because it's a false friend. Gives you a lot of great tools, a lot of great reasons to dig into it and try to mentalize over it and make it your own and try to beat the other fellow or the other lady out there in your trading and come out with a profit on a daily basis. So a lot of time and effort is placed there. I would suggest order entry is a very good place to really concentrate and find the best order entry, not only on how to handle trades, but the speed and the data speed is important. I would spend time in that area. And I would also spend time uh, really focusing on what's happening based on market movement on a particular day, momentum and follow through, your risk profile coming in and how it changes based on the cash open, how many contracts you're doing, whether it's zero, in other words, one contract in simulation based on zero risk, and then getting good at this, consistent at this, and then only trading with real money when you're ready. It's like jumping into brain surgery before you're ready. They just don't let you do that. But individuals sitting in front of their computer certainly do. They whip around stuff that they probably shouldn't be whipping around. They get diluted based on what's happening and they get caught up and they get frustrated and they get elated when, a trade works. A lot of it's like golf. What keeps you bringing, going back to golf? It's the one or two great shots during, 18 holes or 9 holes that bring you back. If you do that in trading, that's tough. So what we look to do here and what the difference is that Sol is giving you levels. Now individuals ask, well, why should we listen to Sol's levels? Why should we write them down? Why should we pay attention to anything happens in and around those levels? Well, you get to witness it. Think about that. You get his levels ahead of time, before or right around the cash open. Then you get to figure out by plotting them or paying attention to what happens as the price movement happens after the cash open, whether law whether Sol's levels are any good or not. And you can see it over a course of days in being able to decide if you want to join here to be part of his monthly, to see now if there's something here for you as a new trader or an experienced trader that's really looking to get it done. Two, three, four, 5 trades. Sol's giving you levels ahead of time. The levels are good, and you can start to concentrate on the trade action or price action in and around Sol's levels, and you can make that a trade and a profit, and you can consistently do that on a daily basis or whenever the market. So I mean, think about consistent profitability. There are days when you shouldn't trade at all. There are days where you should trade more often. You bank your money and you're done for the day. So you got to balance that out. Okay. If anybody tells you that there is a cookie cutter way to trade and you're now going to make money at it, run. If anybody tells you you're going to make money trading, based on just general make money trading, run, because most people fail at trading. That's the reality. Why do people come to Sol? Started out a long time ago, where other traders on the floor said, "Hey, listen, if you want to learn how to trade, go, you know, be friendly with that guy." And then they would ask Sol, "Hey, could you take care of my nephew? I can't deal with my nephew, but can you teach him how to trade?" And they didn't do that for no reason. And he finally took on a couple people, and then here we are. So the opportunity for you is to stick around, receive Sol's levels in audio, ask for repeat if you don't get them, plot them, learn how to plot them, focus on doing this and doing it well. So I've got, what do I have for you? I have a couple things for you. Let's see what I got for you. So to be here right now, it's priced at $25 a week. If you can't pay that, go away. If you won't pay that, go away. If you haven't paid that, go away because you're not serious about anything. I hate to say that. Hey, Andrew, did you sign up? I didn't see you. Andrew, UK. Did you do that? Let me know. Richard S. Did you sign up for that? I just sent it out to everybody. Oh, you know what? I didn't send it out to everybody. I sent it out to just us. Uh, oh, that's bad. Okay. You should all have that in your chat. That's the only link that gives you the 25 bucks a week. So, you want to come back? You want to be part of it? Let us know by signing up. It's done through PayPal. I have to authorize you in the background to keep the 100. It's $100 a month. Now you say, well, what's so good about that? Well, there's a couple reasons. One is usually $379 a month, so you're paying less. You're saving yourself $279, and if you get it, you get to keep it. And I'm sure you're paying more than that for whatever else you're paying for. So take advantage of it. Sign yourself up. Be part of the family. If you want to talk about Sal's course and mentoring work, we do that for family members. He's got some great deals on that now, so I would certainly take advantage of that. So Andrew, let me know when you're done. What else we got here? Jeremiah, it's up to you. Love to have you. Stick around. Kara, I'm gonna have to put you in the penalty box. I don't want to do that, but being non-responsive and non-paying is a tough thing for us here. You might be a bot. I don't know. Peter P, I think you are. Let me know back in chat. Richard S, let me know. Hey, Warren, I haven't seen you in a while. Welcome back. You know, Adam, I think that, did you talk to Saul yesterday? How was your conversation with him? I mean, are you interested in taking his course? I think we talked about it personally, right? On the phone? Uh, what happened? You went right after him about track records and stuff? That can happen. If you want, post your telephone number again. I'll ring you up and we can go through it. I think we went through it, didn't we? Or maybe we just thought it'd be good to talk to Saul. Yeah, so post your number again. I'll ring you up and we'll see what we can do. Yeah, no, we talk on the phone. We don't email anything to anybody. It's very personal. But we already talked on the phone. You know, we do everything the modern way. We like cell phones. We like Zoom. Zoom has been great. Hate to say that because I know there's a lot of people freaking out about Zoom. At least they were. I think people just got exhausted and gave up. I did that with a TV that I have that's been not working. New TV, brand new, November. that needs a panel. So I went back to the store and I almost had it done. It's going to charge me $50 to give me a new one and then come hang it because they hung it. And then they said, oh, I had to give up my warranty, that I was going to be using my $400 extended warranty on the TV. And then I had to go through all these gyrations with the manager of the store and then corporate, through Best Buy. And, so the TV panel's coming in 8 days. They're going to come, they're going to do it. It's going to cost me nothing. The new TV I could probably get, it would cost me nothing, but it might take a lot of gyrations. So I decide, and my daughter's home. I got all sorts of stuff going on, COVID stuff and everything. So I decided just to do nothing. Now we don't watch a lot of TV because I hate the news. The news says, anything on the TV that has anything to do with news other than weather is not in my wheelhouse anymore in any, format. So we don't have the TV on. So we watch a little bit at night on, we have a second TV, watch that a little bit at night, but not the new one. But I'm actually happy in some ways not to have it on or in the background or that type of thing. Gives me a chance to do other things, but it also takes it off the plate. So I don't have to pay anything in 8 days. But I'm just waiting for the panel to come in and then they say, oh no, it's, some other part or some other electronic chip, or circuit board. And then, I'll hit the roof. But anyway, so yes. So Adam, put your number in there and we can talk. So I really want to get a sense of what you're looking for. And everything here is very personal also. So Richard S., I think you're part of Sal's Monthly. Let me know back in chat. When I shorten up the name, sometimes I don't know who I'm talking to, so that's my problem. But Peter P., let me know. Kara, I think I'm just going to do that now, Kara. You're going to be in the penalty box. I don't want to do that, but you give me no choice. Andrew, let me know what we're doing. Hey, Don, how are you? Don, I haven't done anything with what we talked about, and I got to see if I get jazzed up to do that again. Hey, Jeremiah, let me know if we're good. And remember, non-responses is not an option, gang. Those that are joining us on the outside, join us on the in. You really want to learn how to trade? You really want to get better levels and better numbers? You really want to have good commentary in and around the trade? You're witnessing it, so you don't need to be um, stroked. You know what I mean? With other stuff. Okay, great. Thank you very much. I appreciate the people that just signed up. Thank you. I'll be in the background if anybody needs me. Sal could be stopping in and out. Right now it's 10:53 a.m. It's January 22nd, 2021. Everything we do is for educational purposes only. Nothing is to be taken as direct trading advice. Your trading is done between you and your broker. One thing I'll also mention, anybody that is part of Sal's class that signed up for his class in 2020, or earlier. You have the option of joining Saul's class when he has it. He's been having them on a pretty regular basis. You're able to join, but you've got to be part of Saul's monthly. So I would take advantage of the $100 a month while it's available. Usually it's $379 a month. It's on for 125 bucks a week. So take advantage of it. His course is a great opportunity to get refreshed. You can ask questions, you can interact, you can talk about particular subjects, trades, things that you did, things you wish you did. So make sure that you're signed up for it. If anybody needs any trading software, let us know. If you need a new broker, let us know. If you followed up with one of our brokers, let us know how it worked out. Remember, they're not our brokers, they're brokers, and you need to screen them for your own benefit. So make sure you do that. And I'll be in the background if anybody needs me. Hey, quick shout out, welcome to Tristan. Hey, Tristan, welcome. Quick shout out to you. Hey, Jeremiah, you back? Let me know in chat, Jeremiah. Richard S, let me know if you're back. Richard S. Peter P, let me know if you're back. Peter, use the chat feature to respond. If anybody missed today's levels, you can always ask for a repeat. Use the chat feature. Hey, quick shout out to Greg H. Hey, Greg, were you interested in, I think you were interested in Sal's mentoring in his coursework? Just let me know back in chat. Hey, quick shout out and welcome to James S. Hey, James, welcome. Let us know that you hear my voice, see our charts. Greg H, let me know if you're back. Greg H. Peter P. Hey, Peter, you back? James, use the chat feature to respond. Hey, James, just let me know if you've got the audio and Sol's charts.
Right. Well, you can see how the market kind of got a little bit quiet here. We got through that 38 area very easily and then popped up to, of course, 43 where we had 44, right? That kind of day today. Anyway, we are going to be conducting a class in this venue right now. So if you're not part of the education course, if you can kindly exit, and you're more than welcome to come back in an hour on Monday. As long as you come back on Monday, you can always pick up on where we left off. The market definitely got a little bit more quiet here as the afternoon wore on. But if you can kindly exit right now and rejoin us, obviously Monday would be our next opportunity. Peter, are you still here? All right. Just give me a few minutes here, get everybody cleared out, and we'll start. All right, again, we're going to have a class here in this venue. If you're not part of the education course, if you can kindly exit and rejoin us here Monday. We'll be back. If you, I'm going to have to boot you now in a couple here if you don't exit. Okay, I think I'm going to have to take drastic action. All right, I think we're almost ready here. Let me get you situated. All right, Peter, you're on. Can you hear me okay?
Yeah.
All right, there you go. I can hear you now. How's it going?
Great today so far.
Good, good. We got a little bit of action here that we can go over, and I have to. I have a somebody's the internet guy's coming in here right now, so uh, we're going to have to call this at like about 12:30, 12:40, something like that.
Okay.
All right, because he's got to do something with my television hasn't been working. It's everything's kind of goofy. So and they don't come out as easily as they used to. So it's a pain in the ass to get them out here. Anyway, so let's go over today's trade. We had a couple trades. You got the numbers right this morning.
I did. Yeah.
Okay, so all right. Tell you what. Why don't you tell me what we could have done this morning instead of me telling you? So
Okay.
we opened up.
At
We opened up right here at
87
8:30.
83824. Yeah.
Yeah. All right. So you tell me what could have happened then.
Okay. I think when we open up, we um went a bit on the upside. But for quite a while, we were on the upswing because all our levels, our support, everything was not really working initially. And of course, the 9 o'clock news also was able to pull us a bit. It was higher, you know. So we were not having enough trades until the point where there was a rotation. I think that was at the level of 3838, I think, maybe something quite, and that was where we had. No, we couldn't get to 3.8 because I think it was the market turned at about maybe 3.837, and then I remember that you were saying that all your levels today have not been working at that particular time, But I think what I was able to get from there was that usually because the figures you give they're kind of a round figure, and then we could try and be when you talk about scaling in, um if maybe some if you had come like maybe 37.5 at that particular time, 37.5 could have been, there could have been some good move there to sell. And then we came down, and particularly what I was really impressed was when we got to a kind of range that we had a double top that closed below the the blue band, and then from what I've learned so far, that was a very good sell signal for me because we couldn't close above it, and so that was a sell signal there that really worked very nicely. And then after that, we broke the blue band again and we moved up, and then we closed, above it, and then but we couldn't hold. So, and then we kept moving up again, and then because we had this double top that closed above on the blue line, then there was this, a buy signal, and then we went up again. And of course, there are always level for us to find the exits, our exit strategy. So it has been a good trade for me so far today. It's been good, except the first except the first 30 minutes to 1 hour that was a bit goofy to me, you know. But
Mhm.
thereafter, every other thing worked, perfectly well.
Okay, so here's what I take from that. Actually, the first level here was the 30, right? And we got it was a little bit tricky there because it stopped right here at 29 and a quarter.
Okay.
Okay, so uh, and then it came back down a little bit, stayed above the blue band. Okay, so initially, if you came up here, this happened yesterday too. On the other way, though, if you came up here and you saw this um, right before the opening, you saw this build up here. Right, this is right before the opening, and we stayed above the blue band. You could almost make a case if you wanted to trade right off the morning to be long.
Okay.
Right? For
Yeah.
what reason?
Opening above the blue band.
We held, yeah, and it's opening above the blue line, but it held, and it looks like it wanted to extend here
Okay.
just a little bit because we got above this over here as well. All right. So a couple of reasons there to maybe you wanted to maybe if you were aggressive get long a little bit. So my first sell order would have been right up here at the 29 area, 29 and a half and 30 and a half. Okay.
Okay.
Because the 30 is the number. Now we got up to 29 and a quarter. And so I said, and then the number came out. So I said, probably this 29 and a quarter, this 30 is not going to be any good.
Yeah.
Because, why do you think?
Um, because at that time it's still above the blue band, and selling at that point maybe going against the principle.
Well, let's look at it this way. That's not necessarily true. But the reason that the level is not good anymore is because we went to 29 and a quarter. And let's say, how are you going to scale into a sell? How are you going to do that? You're going to put it at 29 and a half and 29 and 30 and a half, right?
Yeah.
Is that what you would do? Let's say you're trading two lots. Or you put it at 30. Let's say you just put one lot at 30. Okay?
Yeah.
So we get up to 29 and a quarter, and then we trade down. So my thinking, and this is what you have to think about, if the market trades like this, and it did it for the 30 also, but I mean the 38. But forget that for a second. So if we get up here and we miss it by a little bit, 2 ticks, 3 ticks, now the level is not as strong as it was the first time. Like we wanted it to get up there the first time, and then we traded it, and then we would have been okay, right? But it didn't get up there the first time. We missed it by 3 ticks. Our entry point to being short. You understand what I'm saying?
Yeah.
Right. So consequently, because we missed it by just that little bit, the level becomes a little bit more dangerous to trade.
Okay.
Okay, it's not as strong as it was before we tested it. So once we got up there and we tested it, right? We got up there and it tested and it got up to 29 and a quarter. That's a test. Now the reason I'm saying that we're missing it by just that much is because I wanted it to get up to 30 and then come off. It got down, it went up to 29 and a quarter.
Yeah.
My point is that, are we wrong? We're not technically wrong,
Mhm.
right? We just missed it by just 2 or 3 ticks. So technically we're not wrong. We weren't wrong with the level. We weren't right in our entry points, but we weren't wrong with the level. You understand what I'm saying?
Yeah.
The level was 30. I said 30, and I said we're not going to be perfect, right? That's why
Yeah.
we scale.
Mhm.
So the fact that it went to 29 and change, even though we didn't, if you didn't have 29, like some of our traders, Mark, who puts in the levels, he puts in 29 and 31 if the level is 30, right?
Yeah.
So he got the 29 and then it
Okay.
traded down.
Okay. Okay.
Okay.
Yeah.
But for the rest of us, if you let's say you only had 30 and you didn't trade 29 or 31, right? Let's say you only had 30. Well, you didn't get it. So consequently, that level is a lot more dangerous now. And what do I mean by dangerous? Is that there's a better chance of the market going through that level,
Yeah.
instead of holding and trading away from it. Right? So it traded away from the 29 and came back down, but it didn't. But once we missed it, then now this level here at 30 is dangerous. So you have to make a choice. Okay. At this point, let's say you had 30 and you didn't get it and you missed it by 3 ticks. Well, what do? Do you leave the 30? Do you change it a little? Do you cancel it? Those are the choices that you have. Right? You change it. It means you adjust it higher. Do you go to 32 maybe? Or do you go a little bit? Remember, there's always a secondary level.
Yes. Yes.
Right? So that's why I can say we can adjust it. Or some of our traders don't like to adjust it at all and they just cancel.
I think I'll go for canceling.
Yes, you would. I know you. And that's what you would do. That's correct. And that's fine. There's nothing wrong with canceling the order. Right? That's okay. You are patient and you will wait for the next opportunity.
Yeah.
And that's fine. You don't have to. So when I said this morning or a couple of times, oh, we're just missing our levels, because we got up to 29 here and 30 was our number. And then the next level was got up to 37 and a quarter here. And we missed it again. But were we wrong?
No, we weren't.
No, we weren't wrong. We just missed it
by any beats.
Right.
Not by any beats.
Right. So sometimes that's going to happen. So this right here, okay, this is 37 and a quarter. This is high.
Yeah.
All right. So now what I said was, we are going to what happens here now? So the same thing happens here. We have the same problem, right? That if we come back to it, we're probably going to go above it. Same thing when we missed it here. We never had a chance here. We're going to go above it. So it just turned out in this situation that the market did turn down and went down, but that's not the point. The point is that the level, this 38 level, becomes risky. And look what happened here. It kind of went straight through and went up all the way up here to almost, again, we missed it by a point. It went up to, we have 44, it went up to 42 and change. Right? I mean, that's the kind of day we're having. But the point is this, here in this situation, we miss it by a little bit. So you have choices. Your choice is to cancel, to adjust, right? And how do you adjust? You can adjust by moving the level higher or lowering your risk. And how do you lower your risk? Let's say you're trading um, more than one contract. So let's say you're trading 4. You lower your risk by doing 1.
I
Right? You
reduce
don't
my
have to.
profit.
You don't have to leave it at 4, or you don't have
Yeah.
to leave it at 2, or you just cancel it altogether.
Mm-hmm.
You can cancel. You can adjust. You can lower your risk. Okay, and those are all choices that you have, and you are choosing the thing that I would tell you to choose, because you're very risk averse and you are patient, and you can wait for the next opportunity, which is
Yeah.
fine. And so the same thing. So once we got up here, the 30, 29 and a half, it kind of went right through, came all the way up here to 34,
Yeah.
and traded down a little bit. But I mean, what were you going to adjust? You could have adjusted up to 32, maybe 33. You would have had to taken some heat here before you made a little bit of money on it. So it wasn't worth the aggravation.
Yeah.
And then the same thing happened here. We got up to 37 and a quarter. We missed it by just that much. I will tell you that Mark also had this one because he had 37,
Wow.
right?
Wow.
And it traded down and he was all happy.
Wow. Maybe I think I'm beginning to get an advice. I mean, an idea of course, there are, each person will have their own trading style. But maybe now I'm beginning to think that I will also be forming some secondary levels beyond the levels you give me. At least the levels you give us is a very good reference point for us to be able to make money from.
Right, and that's exactly what they are. The reference points.
Yeah.
They're not, things they're not gold. Like people come in here and say, "Oh, what are your level? How good are they? What is your track?" I mean, I just said, some people would have put 37. Does it count?
Yes. Hmm.
Right? Does it count when they made money, or is it wrong? Am I wrong? I don't know. I mean, how do people tell me? But you're right. It's just a guide,
Yeah, the guy.
right? A
Hmm.
guide for where the market could stop, should stop, maybe won't, maybe it will. But at least you have an indication. And then also, what we'll do next week, okay,
Yeah.
is I'm going to show you how I get the levels in the morning, what I look for, okay,
Okay.
and my mindset as far as getting levels are concerned before the market opens.
Okay.
Okay, so I will go through with, I'll take the levels each day. I'll give you my mindset as to what I was thinking, why I'm saying it, and then the following couple of days after that, we'll do that again, and then I will tell you to figure out levels before the market opens, and then tell me how close they were to mine and why you picked them in our lesson after that. So
Okay.
okay, so we will get to that. We'll get to the levels, how you figure it out eventually. I'm waiting for the other student that I have. He was working this week. He was out of town, so he was
Okay.
busy. But he should be back next week. So we'll add him onto the lesson, and it'll be good for him because he hasn't gotten to that point either. So anyway, but that's that. So yeah, but you're right. They're just a guide to help you,
Hmm.
and but you also have to know how to use them,
Yeah,
right?
that's true. That's
You know,
true.
you have to know when to cancel, when to adjust, when to leave them, when they are targets. All of that kind of stuff. Those are the things that you have to consider. All
Yeah.
right, so yeah, so we came up here, and again, you have to be a little bit careful, because once you miss a level by a little bit, it becomes risky. It popped here, and you can see here when they came back and retested it, it went right through. It
Right through it. Yeah.
never gave you a chance to make any money. But I wouldn't buy it if it got above. You know what I'm saying? I'm not saying that this is going to happen all the time. I'm
Okay.
just saying that it's just riskier, but it's not a buy. Yeah, I just told you that, oh yeah, it's riskier that you should buy it. And I'm not telling you to buy it. I'm just telling you that it's riskier to go trade it. The reality of it is, a lot of times it does hold. It goes and retests, go up by a couple ticks and comes back down. but that's not always the case. So you have to, that I wouldn't tell you to sell it. I would just tell you, to just trade it, trade the level.
Okay.
All right, but understand the risk, and this is what I'm trying to do, is to help you understand the risk above everything else.
Yeah.
Okay.
I have a question.
Sure.
Yeah, the question is that there's this a mantra that says when your market opens above the pivots,
Above the what?
above the pivots,
Yeah.
that you should, for example, as in when the market opens and then you already determine your pivot and the market trades above it in the first bar, that you should buy. What do you think? And if it's vice versa, if it opens below it, then you should sell. What do you think about it? Because it appears that it's been holding, and for a while that I've been studying it now, it appears that mantra is holding.
So you're saying if we open above the pivot, to buy it
Yes,
or
yes.
sell it. Well, that's how I started my discussion with you this morning in regards to what you would do this morning, and I would say that prior to the opening, this trade here is prior to the opening. Here's the opening. So this is a little bit of a trade prior to the opening. Okay.
Okay.
So I wouldn't necessarily tell you that that's always true, what you just said there. I will tell you that you have to look and say, okay, here is a build up above the blue band. What are we doing here? We're kind of flagging, right?
Yes.
Okay. So and we're holding above the blue band. So there is a technical reason. Okay. I always want you to have a reason. So we do have a technical reason from the work that we do to you want to be long.
Okay.
Right. If this situation happened below, right?
Yeah.
Would I tell you, I don't know, and then it rallied. I don't have a technical reason to be long. I would have the opposite. I would have a technical reason to be short.
Mm-hmm. Mm-hmm.
Right.
That's
so
true.
This week, I will tell you, this week, what you said happened twice or three times, maybe.
Okay.
And one was today. The other day, the same thing happened. We opened below, we traded down, and then traded up the rest of the day. But you could have made a technical assumption to get short, to get long here today and short the other day. And it traded below the pivot and below the opening. But there was two. The thing is this: if we opened up here in this area, like in the middle, what would this one is a lot more confusing.
Yeah, very confusing. Yeah.
Right. So
yeah.
this is the problem. And usually at night, okay, you have a tighter range, and it's like this, and the blue band is horizontal, so you don't really get an idea. In this situation right here, we did get a little bit of a 45-degree angle on the blue band to give us a chance to say, okay, maybe I want to be long.
Okay.
All right. So in this situation, but I will tell. So now, since you said you brought it up, where would your stop be? You wanted your stop below. We opened up right here.
Yes.
So you want your stop here.
Yeah.
You want your stop here, or here. So yes, now that becomes the problem. This rotation here back to the blue band is a buy, but you have a stop.
Mm-hmm.
So what does that tell you?
You mean the exit strategy?
Yeah, I mean, what would you do?
Yeah, you've already marked the levels. Those are probably the levels I will have targeted myself to.
But you told me you were buying it.
Yeah, I would definitely be buying it. Yeah.
But now it went down to the blue band there.
Well, what I would do is, because one has to get to a point where you have to be able to look for confirmation. I would allow the last bar to close first, and above that blue line, before I will make my move.
Well, but
You know?
it opened up here. We're above it. We're solidly above it.
Okay.
So, and your theory is actually not the worst theory. I'm just throwing a different element that the market could do. You say you wanted to buy it and you came up here and you bought it right here.
Yes.
Okay, that's all good. But instead of going this way to make it easy for you,
Yeah.
it went down here first. The question is, what do you do? What do you do? And remember, my theory here is that you let the market dictate what you're supposed to do. Hang on one second.
All right.
Um, and and up, we are having welcome to our trading room here. But first, so secondly, we are having an education course in this venue right now. So if you can kindly exit and come back on Monday, we are here every Monday, every day, early, trading S&Ps. So if you trade futures and trading S&Ps, we'd love to have you. But if you can kindly exit today and come back on Monday, I'd appreciate it. Okay. It's a tough job I have kicking people out. I'll tell you that much. I'll tell you that much. It's not an easy job. Not my favorite, I'll tell you that much too, but that's another story. Alrighty.
Yeah.
So that's where we are at. Yeah, so my question is, again, I'm going to put this question to you. You bought it here, which you wanted to buy. We're on the opening. It's a opening range, a pivot. You have a reason to buy it now, but instead of going this, it came here. Now what do you do?
But maybe I will not buy at that point.
Oh,
Maybe I will wait a
oh,
bar first.
oh,
Maybe I will wait.
oh.
I'm going to wait a
See,
full
the thing
bar.
is this. The thing is this. Here's the thing.
Yes.
The thing is this. It's easy to make that call, like you just said to me,
Okay.
when you know what happened and you saw it and it was easy, right? It was easy because you told me all I needed to do was buy the opening or buy the pivot and it went straight up. You're right. Today it did. Right? Today it did. But will it happen tomorrow? Or if it did happen today and it went down first, what do you do? Right. So here, think about this. Remember, I'm always thinking about your market mentality.
Yeah.
Okay. You are going to buy it in the first minute of trading. And within 2 minutes later, it goes down 3-4 points right to our blue band. But our blue band is not an exit. Our blue band initially coming back, and not only that, is a lower end of the value, right? Is not an exit strategy. It's actually a buying strategy. So you're going to exit at the place you should have been buying it, right? Because you're stopping yourself out.
Okay.
And then the market probably will come back and touch the blue band and go up. And then you'll be very upset because you were right, but yet you got stopped out. You see where I'm going with this?
Yeah. Yeah.
Okay. So I'm not trying to be mean. I'm just telling you that what is happening happens. The stuff that I'm trying to convey to you
Yeah.
is going to happen. So I'm trying to keep you out of trouble.
Okay.
The first thing you do is keep out of trouble is maybe the first couple minutes of the day, let the market kind of do its thing.
Okay.
Okay.
Yeah.
Secondly, if you're going to make that trade, you're going to have to be, you're going to have to say to yourself, if it goes back to the blue band, I have to buy it here too. So if you bought 24s here,
Yeah.
okay, and it goes down to a blue band to 2021, you're going to have to buy it here too.
Yeah.
Okay, because you don't want the buying area to kick you out of your sell. I mean, that's the thing. The market always forces you to do the wrong thing. Just remember that. The market doesn't want you to do the right thing. It's an adage. the market is always going to force you to do the wrong thing. And here you have these triple tops, you had a bottom, you had a value. But if the market came down here and you got stopped out and it stopped and reversed, you'd be very upset the rest of the day.
Yeah.
And so if you're going to do it, you have to say, this is your entry point. What's your secondary level below it? Your secondary level below it is right here. You're going to have to do both, or you put your order in here to buy it. And maybe you get filled, maybe you don't. But
Okay.
at least that's the right place to buy it with less. And now here, if we get below here, you get out. See, this is a better exit strategy because there's another 2 points here before you get to the next stoppage area, which that's a lot, right? Then you're going to be trading below the blue band anyway, so you don't want to really be long below this level.
Okay.
So again, I'm just trying to open your eyes to different concepts and ideas that are gonna happen when you're trading.
Okay.
And you have to understand that how do you deal with them? How do you trade them? How are you going to be able to manage them are very important to your success.
Yeah.
Because not every good trade doesn't always go your way right away. The good trades, you have to work a little. And I don't want you to get into the position of putting on a trade and having you not traded the right way because you're not handling the risk the right way.
Okay.
Again, we're all talking about risk here. That's very important.
Yeah.
Okay, so you asked me the question about buying it above the pivot or selling it below the pivot. Yeah, I would do it if you have a reason if the market is setting up something very nicely for you and you have a technical reason to do it. In this situation, I could have said we got above this level here and above the value here. Yeah, I think maybe it's a little bit of a buy. I would agree with you, but you would also have to buy it back up here, down here to the blue band if you're going to do that. Okay.
Yeah.
All right, good. So let's talk about what so we came up here to the highs and then all of a sudden we started breaking down.
Yeah.
Right? And where did we go down to?
We got the level of I think that level was a level where we broke through initially.
Where do we go down to?
We have a lot of air, so we still have a lot of the pivot. That was the level we broke through the pivot, and then
no, we came right down to it.
Yes,
that's exactly where it went down to. Is 24.
Yeah.
Right, and so remember, first rotation back to the pivot is always a good trade. So high, big break, rotation back to the pivot, and a good bounce back up. I said in the room, and this goes to what I just was talking to you about. I said somebody asked me, "Are you going to buy the rotation to the blue band?" And I said yes, which was 27. And what happened? It went down to 24. And what did I do? What do you think I did?
What?
What's that?
You bought at 24?
I bought at 24, right? Because that was my pivot. And like 2 minutes later, it was up at 28, right? But you had to understand that it broke through really quickly. It didn't hold. I didn't get I didn't panic. I knew that my pivot was below it. It stopped right there, rotated back up, but 2 minutes later it was up there at 28. It went up to I think 30, and I was out at 29, and that was it. This is a nice quick trade that I basically had to wait almost all day for it, but it happened really fast, and it broke through really fast our blue band, and all of a sudden I'm like buying the 27s and I'm buying 24s, and I'm like, whoa. What just happened here? And then all of a sudden it stopped, started ticking back up. I scaled out of a couple, lightened my load, and then I kept the rest, and I made a nice trade out of it. But I didn't panic. So the same thing here. If the market opened up here at 24, like you said, and we drifted quickly down to the blue band here, yeah, you had to buy it. You can't think about it. You just have to do it. And then if it starts trading below it, then you have to get out.
Okay.
Okay. But
Yeah.
you have to think fast, right? The market doesn't wait for you.
Mm.
It's going to do its thing, and you have to be ready. Okay. So, did I think we were going to go down that fast? I didn't. But all of a sudden, I'm like, whoa, what's going on here? And then I'm thinking to myself, oh, I got 24 as my pivot. So I'm like, yeah, you gotta buy that. So first rotation back to the pivot, right, is always a buy off of a high or low. Okay, and we've talked about this before, and it was also a nice little trade here. It spiked low and then came back up, and then faked everybody. Then we held. We came above the blue band here, held. It gave you a chance to buy the blue band. You could have done that. You like this trade. This is the trade that you see.
Yeah, I loved it.
Yeah, this is the second time you told me about this trade where a rotation back to the blue band and you can buy it.
Yeah,
right.
Yeah.
So you've seen this trade work for you. You know how it works. And you've liked it, and that's good because you're going to find those are the trades that you're going to find for yourself.
Yeah. Mm-hmm.
Because those are the ones that you are visually recognizing.
Yeah.
And are able to trade it with not a problem. And that's fine. That's fantastic.
Mm.
You know how to trade it. You're waiting for it to set itself up. And once it sets itself up, you're taking advantage of it.
Yeah.
Right. It's fantastic. I think that's great.
Thank you.
So I'm glad that that's the one of many trades that we will figure out. All right. All right. So remember, this is what I want. So remember, rotation back is always as an opportunity.
Mm.
All right, to scalp, and this is one of my favorite. This is one of my favorite ones. Rotation back to the pivot from a high or a low.
Mm.
Yeah, it happened really fast. I have no idea what happened. Usually it doesn't happen so quickly, but it does give you an opportunity to trade. So keep that in mind if you're going to. And then you like this one.
Mm-hmm.
And you talked about your pivot and what you would do here if you bought it right away.
Yeah.
And we talked about canceling your trades if we miss it by just a little bit.
Good.
If you don't get your entry point initially, the trade becomes riskier.
Just cancel.
So you have to decide whether you're going to keep it or adjust it or cancel it.
Yeah. And I also know learned today. I also made up my mind today that the level should give us our reference points, and so we can decide what to do with it. Maybe remove one from it, and then or add one to it, and just have a way of making use of the reference points that you give.
Right, keeping you focused on the market. Correct.
Yeah.
Okay.
Yeah.
That sounds good. All right.
Yeah.
So next week we'll shoot for the time being. Let's try Monday. We'll see how my schedule goes. I don't know what's going to happen for me next week, but we'll try Monday.
Okay.
And then we'll see if if the other individual is back next week. I want to get set up with him too. So we'll talk about that next Monday. So I'll talk to you. Sorry, I'm cutting this short a little today. I have to deal with this thing at home. All right.
All right.
Fantastic. You have a great weekend.
You too. Yeah.
And I'll talk to you on Monday.
Yeah. Bye.
Bye-bye.